Hey traders, TG Watkins here, April 17th when I'm recording this, and this is your Daily 5. All right, so a little bit different. Normally I show you guys just charts with the Moxie indicator and all that kind of stuff that works well for it. But today, since I was kind of looking around, there's a lot of chatter out there in the social medias, and we are in a very interesting phase of the market. There are a lot of stats that are saying that we should be bullish throughout the year. We are seeing glimmers of hope. We are seeing things to where a lot of stocks have already been repriced and are definitely down along the bottom. Now, I think there are a lot of stocks that, as it have been repriced and are already down and dead and are unlikely to go lower, but they could be in hibernation mode. So just because they're down and won't go lower doesn't mean that they're going to have to go up. They can go sideways for a long time. So that's kind of the thing that we have to figure out, is this sector of names might already be down and dead or hibernating. But then that could, what is it going to mean for the rest of the names? Think Apple and Microsoft or whatever, and just the overall market in general. And so this kind of chart has been getting talked about. And essentially right here in the upper right hand corner is what some people are starting to talk about. Now, I don't have an answer here. We're going to have to wait and see how the market's going to continue to react and behave over the next several weeks and months. But the idea is this complacency thing. And essentially what it is a double top. I know there's a peak up here, but really when you think about it, other than the peak, what do we have? A double top. Or you could say we have a higher low. You know, whichever thing that you want to describe this as. Heck, you could even call it a head and shoulders. You know, here's the left shoulder, here's the head, and here's the right shoulder, and then we go down. And that's what we're trying to figure out if we're actually there for the market, as far as the indexes. And so I think what we're trying to do here is just say, here is a possible outcome. And if this outcome happens to be to the downside, fine. We will be aware of it, we will know it, it won't catch us by surprise, and we understand what could be happening. Now, if this doesn't happen and things continue to move up, fine, we can understand that too, and we've kept our mind and our brains open for whatever possibility of the market that comes out from it. So let me then take you to the next step. I'll show you here, Pinterest. Doesn't this look exactly like that chart? You have the run up, you have the top, and you have the run down. And so that's what a lot of people are trying to figure out is, are we essentially here for the market? Pinterest did it, and a lot of other names did it. But Pinterest isn't necessarily representative of the market. And maybe these names have already done this such that, you know, the rest of the market doesn't need to do this. We don't have that answer yet. We'll have to keep watching. But you can see basically there's the left shoulder, you know, there's the head, and then there's the right shoulder, and down we go. You could also say it's a lower high, you know, that kind of stuff. You could also say, well, double top in a way. So that's what we're trying to look at. This is a weekly chart of Pinterest. And if you look at the, say, weekly chart or monthly chart of the SPY or any of the indexes, you know, we could make the argument that we're here and we could go lower. Now, on that side of it, let me take the other way and let's kind of look at something here. Now, the bullish case and the bullish sense of this might be that if we look at the internals, we read not necessarily breadth, but kind of the equivalent of the put-call ratio. We know that when the put-call ratio is high, meaning a lot of people have a lot of puts, that everybody's kind of on one side of the ship. And oftentimes, when everybody is too far on one side, where do we go? The other side, because everybody's already on that trade. And the same thing works when everybody's bullish. If everybody's bullish, the market likely pulls back because there's no more money left to put in the market because everybody's already fully invested. So, you know, we run out of buyers. Same thing with everybody's short. Well, everybody's short and we end up going the other direction. So if we look at this, hedge funds currently sitting with the largest net short position since late 2011. Now, of course, things are different from 2011. There are a lot of things different. Inflation, QE. Yes, I get it. We are in a different environment. And so that is a factor that we're going to have to take into account. But this is one thing to think about. So if the market is going to go higher, maybe this is something that we look into. And maybe this is something that is part of what's going to do that. Now, there's not really a timing function here. I'm not saying like, oh, next week we're going to go up, or, you know, even this year, because you can see how long has this persisted. This has been persisting down here for a very long time. And for the most part, they have been correct. You know, the market has been down and has been pretty tough. So it's more like these bigger picture things or themes that I am bringing to your attention, showing you, hey, where are we maybe in the overall, you know, cycle of markets, but where are we also currently with, our internals? How do they look and what are they telling us? So then we come over here to the Dow Jones, and this is the monthly chart. Now, the NASDAQ, the semis, the SOXX, the SPY, all are very similar to this. The IWM is a little bit different. It's on its own little thing. But if we are going to go up, one of the things that I want to point out and notice is that price has pulled back into the uptrending monthly 10. And we can see that the monthly 10 is, for me, a line in the sand. That if price is to break the monthly 10 to the downside, that's our downtrend. We see it here. There was a little bit back here. But if price can get back on top of it, then it tends to go that direction. Of course, it doesn't have to happen for, it doesn't have to last for 5 years. It can last for a few months, like whatever. We could always go sideways and then fail. All of this stuff is possible. I'm just trying to show you what generally happens and give us some guidance and some stuff to look at. And not only is price over the monthly 10, it has pulled back into the monthly 10 and held. And I think that's something important to look at. Notice the NASDAQ, we'll have to keep watching if that's going to do it. It is over the monthly 10. It hasn't pulled back. The SPY has been flagging into the monthly 10 and now appears to be bouncing off of the monthly 10 and uptrending monthly 10. And the Dow is doing this. So yes, there are a lot of conflicting things out there in this market currently that are saying, oh, we're going to totally implode, or, oh, here we are sitting in the highest net short position ever. There are a lot of things pulling us, both ways, long and short. And the market is reflecting that. There's a lot of sideways this, right? There's a lot of chop. So what that basically means is we need to be good stock pickers, and we need to find the names and the sectors that are doing well for as long as they're doing well. And that can change, and it changes often. So one of those areas that is hot right now is crypto, amazingly. And maybe it's because of the whole banking crisis that we had a few weeks ago. But Mara, crypto, Ethereum, Bitcoin, they have been moving up. There has been some strength in here. And as far as the Moxie indicator goes, what I've been noticing is price has been pulling back below the daily 50, but the Moxie indicator is above zero. That's a trampoline move. It's bullish. And we notice again, price continues to pull back into the daily 50 and hold. And then where we really got going was this last little thing right here where price pulled back into the daily 21, which is now a higher moving average, and really launched off of that. Now, if you want to find out the exact timing that this worked, there was a double bottom right here. Let me change my cursor color. A double bottom right there with the Moxie indicator above zero. This not only is it a double bottom, it's a trampoline move. And what you can see is here's price below the 50, Moxie indicator above zero, move up. Here's price below the 50, Moxie indicator above zero, move up. Here's price below the 50, Moxie indicator above zero, there's your move up. So this is how I call these things. This is how the Moxie indicator works. Trampoline moves are great. They are basically buy the dip. And when they work, they really shoot price up. And we caught this one perfectly. We got in here, we added here, and now we're up here like plus 30-something% in a handful of days. So it's doing really, really well. It might be a little bit tough to want to be buying it right here, but the fact that these have been breaking out and their strength here, now you start looking for opportunities, buy the dip, look for flags, stuff like that. But it's my job to bring these to your attention and see if you guys can tackle them for your own. All right, so thank you for watching. That is your Daily 5. Now, we are running a special here. The options room at Simpler Trading, we're having an open house between April 18th and 20th, so this week. And anybody who's wanted to see what the option room looks like, what we do in those rooms, in those trading rooms, how we talk to people, what we show. If you guys want to come in, take a look, now is your time to be able to get in there for a couple days and look at around and see what you think for free. So use this link. We'll have it attached, but type it in and that's how you can register for free. Would love to see you guys in there. And yeah, thanks for checking this out. If you have any other questions about me, you can check out my newsletter and any of the other social medias. But thanks again. Appreciate you guys, and we'll see you at the next one.